everybody. Welcome back to the Bear Trap Discord podcast. My name is John Kirby. My co-host is Vic. All charting credits, as always, go out to Ak. This episode, it ended up being a little bit more of a longer conversation on futures accounts, funded accounts, not funded accounts, the sort of different mentality that you have to have going into all these sorts of different styles of trading. And then we ended up also going into all of our projections and all that stuff. So if you guys if you guys are interested in all that future stuff, listen to the first half of the episode. If you would just want the projections, you just want the sort of market reads, go to the second half. I think, though, that, I'd always advise people to listen to the psychology stuff more than the analysis stuff, to be honest. But, do what you want. All right, I'll see you in the next one. Like and subscribe. Bye. There is a psychological difference. I'm still trying to figure out exactly what it is, but I think part of it is when I go out and I buy options premium, or even if I sell puts or something like that, I know in the back of my head that my risk is capped. Whereas, right, if I put on a futures position, even if I have a stop, like the stop technically caps my risk, but it almost feels as if you're really actively managing that stop instead of like having the stop be somewhere and like not having to actively think about it, if that makes sense.
No, that's it right there, is because as soon as you put on, because here's the thing, you do SPX could be going down and your position could be green.
Yeah, and my drawdown, like when I'm trading SPX options, is minimal. So it's like relative to my position size, like maybe I'll have this sounds a lot to some people, but in options it's not a lot, like a 10% drawdown, maybe.
I think I've thought about this a lot, because it's like, how come I can trade SPY or SPX options so well, and I suck at futures? For the most part, I suck at futures. I really just like to trade futures, like if it's in the trend or super trending, and then I'll buy some. But the reason you do SPX so well is because you're buying everything when it's cheap, right? Like you're waiting for the market to come to a level down low, and you're buying the contracts while they're cheap, effectively.
But how is it? Here's what's screwing with my head. Like, how is that different, right? Because I have a buddy who always says he always talks about how it's a different game, and he says that like playing the options is less risky somehow, or like playing the options is less technical. Oh, that's what he says. He says it's less technical, and I'm just like, what the hell does that mean? Like, I still have to look at exactly the same levels, enter the exact same trades. And in fact, it's even worse, because I've had days where my trading technically has been beautiful, and I miss, and let's say that IVs are really high and like I'm long premium for the day, which I've been doing lately a lot. And I won't get chopped up. Like my entries will be perfect, and yet I'll lose money because it's not moving fast enough due to the theta, right?
Mm-hmm.
And so in theory, right, that's way harder than futures, because you have to deal with like 3 other variables at the same time.
Right.
So why? Just why?
Well, again, it's that, and it goes, I think you said it already, it's that the fact that your risk is capped. You can go, well, I could buy this one contract for $300, and it's the max you can lose. Like, you're not going to lose more than that, and you can finagle the position too. So it's like, okay, it goes up, you can sell some contracts against it, or it goes down, and then you can just buy some puts. It's not that big of a deal. But that futures account, those evals are super annoying because of the margin, because if you hit those trailing stops, you're done.
Well, they do that on purpose, and I noticed that in my personal trading, for instance. Like, I mean, this doesn't happen often, but I have had days where, I'm down, $2-3 grand, and then I make my way back up to a significantly positive P&L, because sometimes that's just how it goes,
And there you go again with that trailing stop is really what gets you. It's not so much that you're a bad futures trader. It's just you're a bad trader when it comes to using the trailing stops, because as the market, you're buying the dip, right? You're buying SPX contracts. Okay, it dips, you buy a few. It dips again, you buy a few, because it's coming back eventually.
That's exactly what I do, literally. And it's, I know that most trading advice is, add to a winning position. I tried to do that with futures. It's like, I have a winning position, let me add to it. But here's the issue. I'm sorry for this tangent, but sort of from a more how would I put this, like efficient value poker player perspective, right? your odds diminish the further in profit you are, right? Because the market likes to revert. It's going to revert most of the time. So it usually is, if you have a thesis, it makes more sense, just from my perspective, if you're trading options at least, to add to your position, right? Like your initial size should be small. Tux does this, right? He has a what does he call it? Like testing the waters. He puts his little pinky toe in, right?
Right.
And then he waits to see, oh, what is it like? And then he'll add to the position as he's losing, or at least I do this, as I'm losing, quote unquote, because the structure is still supportive of my thesis. And it just means that my entry wasn't perfect. Whereas, and then when you finally get that pump, you actually take stuff off. Whereas with futures trading, because of the leverage, unless you're trading micros on those accounts, which from a fee perspective is actually really rough, you don't really want to do that. You want to get in perfectly, technically at your level, ride it up a couple points. If it's a good move, you add contracts. But the problem is your RR, your risk versus reward, is actually diminishing the further into the move you get. So then you're put into a position where you have to add risk in order to really profit off of a move. And you do have to do this, because if you don't, those 2 points that you just made, so to speak, they have increased your buffer, right, from blowing your account. So it makes more sense to add risk into having that profit, because every time you cross a spread or transact, you have another. Do you understand what I'm saying?
I do, but here's what happens with the trailing stop and that eval, okay? Because they're moving your stop as you're at the high of your account. And so it's incentive for you to take profits at the highs.
Yes.
Instead of add. And then, so here's the other rub, is if you're adding into, it moves up, okay, right? You don't take profits, you wait for a pullback, you add to it. Well, now your trailing stop is higher, so your risk reward is way different from those ads. So you cannot compound gains with a trailing stop like that.
That's a way better way to put it. You cannot compound gains. Yeah.
And you have to be technical. You have to be precise with futures, because like you said, your risk is capped and on options, and your risk is not capped with futures, because you've got that trailing stop just sitting there waiting for you to just screw up one day. And it's so easy. Like, say you're buying the dip on Thursday. Mm-hmm. You start buying at, I don't know, let me look at the price real quick. You start buying because you know it's coming back. You know SPX going to 4,100. You just don't know when or how long it's going to take to get there. So you start adding at 4,100. That's a pretty good support level for ES. Well, what happened with ES? It flushes to 40.96. Okay. Well, depending on how much you add or what you did, you may have already blown up by then.
Well, but I mean, this is here. Okay, this goes back into another issue that I have, which is like, I mean, when we were talking about this a while back, and you were totally right in saying, hey, man, like if you're having this issue, it's because you're sizing too large, right? You have $2,500 of real money with $50K or $1,500 with a 25K. You can't be trading 2, 3, 4 ES E-minis, right? That's insane. And I think that's totally right? You have to put yourself in a situation where even if you're wrong, you're going to survive to live another day, which is why, when I was, or like I still do this, where I literally go into Rhythmic and I set a thing where it's like, if I've lost more than $500 in a day, which is a fifth of my overall, max loss, it cuts me off for the day. That's it. And that definitely helps, but at the same time, it puts you in a situation where, let's say that you're trading well, right? Most like good traders, when they're trading well, you're used to adding to positions. You're used to really taking advantage of the market because returns are asymmetric, right? It's not like you're going to do well every single day. So I really do think good traders are not just consistent in the sense that they can consistently show up and not lose money, but they're consistent in the sense that when they're making money, they're making a lot of money because they're confident and they're adding. And the problem is, this does not allow you to do that.
And so that's why, the evals, they're good, but you got to trade them differently. And if you're trying to trade multiple strategies, because you got to do a different type of strategy for eval, in my opinion. You can beat it. Like I'll come in there and like you did the other day, I'll come in there and beat an eval in a day. Okay, it's not that hard if you catch the right move, but you can't do that every day. You're not going to be able to do that every day, and you have to trade it totally different than your SPX 0 DTE. And if you're trying to trade both at the same time, it's conflicting. Some people may be able to do that. I was thinking about that the other day. If you could be able to trade multiple strategies in different accounts at the same time, you're on another level to me. I
Oh,
can't do that.
100%. That's exactly the issue. It's totally tradable. It's totally doable. But, and that's exactly the issue I was having. Number one, the strategy or the mindset that I need to pass an eval is completely different from the mindset that I need to maximize, to actually do well once I have a performance account. And a lot of times what will happen to me, at least, is I'll move into a performance account and my mindset will be like, oh, cool, I have a performance account. This is mine. And yet you're still actually in an eval for the first 3 grand. And even more after that, because you still have a trailing stop that's moving with you. And so it's like, not only do you need to be able to switch between trading mentalities with the different stages of moving through the like apex system, but let's say that you're trading other strategies like I am with like options all the time, or like even swing stuff. Like I'm doing a lot of other stuff. The wires just get crossed. It's like speaking different languages at the same time. It's really hard.
The wires get crossed. That's so perfect. So I was thinking about this the other day, is like you should have a different account for every strategy that you employ, right? And they should always be like, okay, so for example, I'm trading SPX 0 DTE today. Okay, I only have one account for that, right? I only have one account, and then I'm like, okay, I want to swing trade futures. Well, I have a different account for that.
Yeah.
But I never have this. I never have strategies going at the same time unless they don't conflict. Okay, if they don't conflict, I can do it. Like if I'm bullish on the market, I'm swing trading futures for a long, I'll play SPX 0 DTE to the upside.
Hmm.
Do you see what I'm saying?
I do see what you're saying, and I think like what's been weird for me lately is that like it kind of took a turn, right? Where like before I was making most of my, and this is that video that I made, the last mini update or whatever, was kind of about this, where like earlier in the year I was making most of my money from swings, right? Because it was so not easy, but it was pretty easy to see when the structure was like overloaded to one side or whatever. And now it's all transitioned and everything's happening on a shorter time frame. So it's almost like being in those swings undermines my capacity to fully execute what I need to do intraday. And then when I'm executing intraday, I don't care if I'm short or long. Like I honestly, oftentimes I have no idea if I have a thesis on the market. I don't have a thesis. I don't care. I'm just looking at like, is this overvalued? Is this undervalued? And so
Okay. Well, so
yeah.
like I said, it takes a lot to be able to do multiple things at the same time and to be in multiple positions, because like right now it's, what do they call it? Dispersion. Nobody knows where the market's going to go. It's sideways. Everybody's positioned on both sides. And like you said, swing trading is hard right now. And like you said, too. So, but being able to trade both sides at the same time, that's what I'm saying, is extremely difficult. And so going back to the futures thing, if you're going to do something in the market, just do one thing. That's it. At that particular time. Like if you're only trading futures, if you're doing an eval, I think it's best for you just to do the eval only. That's it. Don't trade anything else.
Yeah, I totally agree. And as soon as you allow yourself to think, oh, it's easy, or oh, it's not particularly risky because it's not my money if I lose, or anything like that, you will blow up.
Yeah, I mean everybody's blown up an eval account. I don't care who you are. And if you got to baby the thing as well if you're going to keep it. That's the other thing too. So that's what's tough, man. It's like you gotta. It goes deeper. It goes to what your goals are. Are you trying to make money just to make a couple extra bucks a month, or are you trying to make money to live off of and be a day trader, and this is your primary source of income? There's a bunch of different, goals there.
Well, and I mean, like now the issue, at least I have. Sorry to interrupt. I just like this topic. I don't know. It's kind of fun, but is that because the options is working like have been working so well. It's almost like every single time I show up to try and do, like add to my performance account or whatever, I'm just like, damn, my P&L increases linearly with movement in the market. This sucks. I don't like this. Um,
Yeah, no, and that's another thing too is the I don't know if I want to call it this, but the greed factor of playing like if you're really good at playing SPX 0 DTE, why would you even play futures at all? I mean, it doesn't make any sense. You know what I'm saying? Because your gains, even though gains in futures is really nice, is nothing compared to what you get in SPX or in
yeah.
options. Really. And so if you become super good at trading and you have an edge in options, just forget about futures. Why would you mess with that stuff? Futures are there, I think, in a large part for hedging.
I agree. Yeah. Futures are
For
great for hedging options
big funds to hedge.
positions.
Yeah. Yeah, or yeah, you can hedge your options positions with it. That's another thing too, is it's a tool, but trying to have a performance account, it doesn't really make a whole lot of sense if you've got the money to have your own futures account for one, because why would
Well,
you do
it's
that?
it's counterintuitive though, Vic, because my initial thought process was like, well, performance account, it costs $150. I can just keep it around, and then like, I essentially have whatever 50 grand of capital to deploy that I don't have that I don't have to own, and
Right.
like that's beautiful, right? The issue is that there's also, and I was thinking about this, another topic, right? But um, you have to be a little more antsy. So, okay, like when I trade 0DT SPX options, I'm aware that the thing could blow up in my face any second, and then when it does, I'm down, 4 grand immediately, right?
Right.
I've lost that money. Whereas with Apex, the issue is, or even with those funded accounts, it's like, well, okay, I put in a little bit of my time in order to create this performance account. Not even that much anymore, right? Because it's pretty easy to pass the eval and get it all set up. And maybe I paid, $80 or $150 to get it set up, which again, not that much. And so it's like the stakes are so much lower that getting emotionally calibrated to that is very different from being emotionally calibrated for trading normally. It's almost like you're trading, except like there are no stakes. It's almost like it feels like paper trading, to be honest. And so then it's like if you're used to trading with a 300-pound weight on your chest, which is what happens when you're trading with like, your own funds, and then all of a sudden somebody goes, it's like, hey, you can just like play this little game on the side. It's going to be so hard to re-emotionally calibrate and like get yourself into that zone and then be able to switch back and forth. Does that make sense?
Yeah. Yeah, it does. And well, okay, so I mean everybody's different. So you've got sort of like and you talked about this off the recording about having a crutch or having you know what I'm saying? And and everybody needs that. Create these, emotional stabilizers around you to keep yourself in the zone without going crazy. Um, so if that's where you're, another area where you're kind of drawing, security from or stability from. If it's throwing you off though, that's where you got to just cut it. And for me, it throws me off.
Yeah. Okay. So you're also now just on the options train again.
No, no, I'm not. I axed all my Apex accounts. Okay,
Hmm.
because I was sick of them. I was just sick of looking at them. I was sick of trying to trade them, and because I just wanted to trade my own funds. So I have my own futures account now, but I have
Oh,
I have a specific strategy that I use for it. Okay, and when the setup isn't there, I don't trade it. And
awesome.
then
Yeah.
other than that, I'm trading options intraday with a different account.
Yep.
And so my idea is essentially I would like to just swing trade micros with this futures account. So when the setup is there, I'll just swing trade those.
Dude, that's what I wanted to use Apex for. I was like, let me pass these evals, let me get deeper into a performance account so that I can just like leave whatever a buffer of like 5K in there and then just swing
You,
micros.
you can't swing them though.
Oh, because they shut you out every single
That's
time
the other
you.
sucky thing about it is you have to intraday trade. And I did so many back tests. I wish I could throw this example up into the recording for everybody, but I did so many back tests and watched so much price action of futures when I was creating my automated strategies that so many times that you're in a trade, the buy signal for a swing goes off at the end of the day.
Yeah.
And so if you're stuck in this Apex account, you have to get out. And then your entry is totally different when they gap it up. And then the trade's not even there anymore. That happens so many times. Same thing on the downside.
No, so that makes, I mean, that's what preferred user does, right? Like
yeah, he'll just swing trace up, but if you can't hold it overnight, it's sort of just it's pointless. Why would you even look at that? And so then you're stuck day trading the futures, and which is fine, but it's way better to trade the options when you have the edge on the options side. It's just way better to trade the options.
Well, I mean, I can actually express and you know how I think, man. Like I think in options.
Yeah. And most of us started in options. Like futures is like exotic for a lot of folks. I think that's why you're seeing these funded firms, these prop firms blow up here, because not blow up, but get real popular because people started in options and now they're going, wow, futures is way chiller, way easier. I can trade 23 hours a day and all this stuff. And so people are getting into it, but it's still, I think the retail community is still pretty new to it.
Yeah, no, that makes perfect sense.
Okay. So anything we got to talk about this week?
I mean, to be honest, like I kind of do want to do, just like go through all these charts, like again, like kind of quickly, like we did last time, because I'm not.
Yeah, let's do it.
Like I said in the last podcast, like it isn't really impacting my trading very much anymore, but
right.
It will eventually, right? Like if we see a monster crash, like I'll be there to swing trade it.
Right. Yeah. Once the range kind of breaks to the upside or downside. When is that? I don't know.
Oh God. I mean,
at this point, it feels like Jem always says, knowledge is vol dampening, right? And it feels like everybody knows this crash is coming right now. Like we're not the only ones that were talking about it a few months ago.
But you can't, and this is why I also made that thing. You can't buy protection right now unless you know how to. I mean, I was actually talking about this with Doc, and he was like, "Dude, like how?" He did not say "dude," but he was saying, "I don't know. I want to put on this like fancy butterfly something or other. How do I hedge for all of this, right? Because he also thinks that something's coming." But he doesn't want to be paying for like naked puts because, as I said, it makes absolutely no sense to do that. And so I'm like, well, I mean, you could use a calendar, a diagonal, whatever. But no matter what you do, I mean, as is often the case with options, right? If your timing is off, right, then even a calendar or diagonal is not going to help. And yeah.
Yep. And so, okay, so what are your thoughts here looking at this VIX going into, really, I think it's going into April 19th is the big one.
Yeah.
For OPEX.
I mean, don't short before April 19th. That's pretty clear.
Don't short VIX, you mean?
I mean, no. Go ahead and short the VIX. Don't short equities.
Don't short equities. Yeah. Okay. And why do you say that? Just because all of this OI is expiring into
yeah. I mean, this is the classic VIX setup as far as I'm concerned. Like this is what we were seeing earlier in the year, where it's like people are actually starting to be in VIX calls again a little bit. Right, the 30 strike here looks like something, right? 300,000 contracts or so. And yet you have these guys, which like the gamma of these guys is huge actually over here. So to me, this is a really classic setup, like vol dampening till April 19th. And then after April 19th, we'll get the release. Maybe they'll front run it a little bit. They like to move the window around, but yeah, I don't know. You see anything else?
So what is this window we're in right now? This would be the window of strength right now.
Yeah, actually, that was what was kind of interesting. It's like the window of weakness. We did see a couple of. Let me see if I can bring up TradingView again here.
So we had a couple nice moves recently.
Yeah.
Which was not supposed to happen during this window.
Well, they kind of got started, I think. Let me get on a daily here. They got started, I think, during the actual window of weakness, and then, because when was the last OPEX was the 31st, right? Which was here, and then we had I remember this right after OPEX. It's like everybody thinks the market is like ready to go down. They moved it over a little bit, and so then we get these 2 down days, um, which I remember people in Bear Trap were kind of prepared for, and I was prepared for too, to be honest. And then they both got faded, in my opinion, because of zero DTE action. And now we're already too far away and getting into the window of strength, especially with the long weekend. So, RIP Bears.
Yeah, RIP Bears. They failed. And so now you can look at that VIX chart and essentially say, wow, there's just a ton of VIX supply to the call supply, right? That's sort of what it tells me. And every day that goes by, these people are getting wrecked, or they're closing their positions.
Well, also, do you remember VIX being like 60, 65, 70, 100,000 contracts up there? Like that's
I know that's kind of nuts, and I don't know what people are expecting, but they may just be thinking about these bank failures, and they're just hey, another bank fails, like a Charles Schwab or a JPM or something, then you're seeing 60 VIX, 70 VIX. But if not, who cares, right? Just buy the dip.
Yeah, it is a little buy the dip, trade intraday. All right, let me move to the next guy, SPX OI here. Wow, that 4,000 strike, man.
Yeah, so when you think about this 4,000, you would just sort of think of that as sort of equilibrium, I would think, right? Like
Yeah.
So if you put it on a chart, go to your trading view chart, and then just put a little horizontal there at 4,000.
Let's see, I never used trading view. Let me see if I can. Oh, there you go.
Yep.
Okay, great.
Yeah, so right there.
Dope. Okay, and let's zoom out a little. Ooh.
So the way I sort of think about it is, okay, we got this handle at 4,000. How far away are we going to move away from it in the next period? And then are we going to break out away from it? That's the next question. Is there any kind of juice to do that?
Yeah, it's like
are we just
right?
Are we just supported? Right. Yeah, it's just like a VPOC. Are we just supported here? So we're not going to break away from it too far. So every time it tries to go higher, it's going to come back and revert. But as we come into that level, we get bought up again.
I mean, I honestly wouldn't be looking at this. Okay, and this is my stupid little chartist perspective. I don't usually look at charts, but it's like, hey, this is a nice little box we got going here,
Yep.
It almost feels like, oh, okay, we're going to overshoot here, and then we're going to plummet all the way back to 5,800, maybe a little higher, and then we'll just be trapped in this box until something changes.
Right. So yeah, that's sort of a way to think about it. And if you're bullish and you're trying to get long here, what are you trying to get long for? Like, where's your target? How much farther away are you going to try and get from 4,000? And so, 4,200 definitely in the cards, I think, but that would be extreme overbought for me.
Oh, there we go. Look at how well I did that.
Hey, look, 4,200 right there at the top of that channel, and you can see it in the GEX once you start looking at the actual gamma, net gamma. At 4,200 is definitely in the cards in next week.
Oh, here we go. Yeah, SPY 420. It's actually 420 on SPY is actually there's like a slight premium to SPX, so it's like or reverse premium, whatever. But like SPX, it's like SPX 4230 or something. But
right. So okay, well, in SPX it shows 4,200 is likely to be.
Okay.
So you got like this supportive.
Dude, I'm sorry, but like that's an insane amount of GEX for being that far out of the money right now.
Right, and it's funny because the zero gamma is right there too at 4,200. But that right there, I mean, looking at the VIX and just kind of having this supposition that every time VIX goes up, it's going to get shorted because there's going to be so many sellers into it. Then yeah, you would at this point you would just be buying the dip on SPX until you get to about 4,200. But that 4,000 is going to be calling you back down, I think.
Oh, I mean, it's beautiful, right? Like we get this like beautiful setup where it's like, okay, clearly a really nice little bull flag here. Again, sorry, but we still have this terminology from when we first started.
Ain't nothing wrong with it, man. If the bull flag shows up and you're bullish, well then all the power, more power to you, because people are going to be looking at that.
And then it's like beautiful. It's like boom right there, 42.30. I'd say maybe overshoot a little, like overshoot the 4200 by a little bit, and then all of a sudden, we're looking for 3850 again, essentially, which is going to be kind of epic, I think.
And that's definitely I don't know, man. That's definitely possible. As a scenario, I could see coming into this next couple weeks, really. I would be looking for the lows to get broken, actually. If once that OPEX rolls around, if folks are kind of sick of looking for this crash and we're trading 4200 SPX, that's when I would think that, those lows get broken, that 3800 gets cracked finally.
I mean, I would be so happy. It's just I've been sort of how would I call it, a professional deformation, malformation. Just like, really, Vic, really? Nah, nothing's gonna happen.
I know. Well, think about it. Okay, so you got price sitting here at 4200 and it's breaking those previous highs. You got this little gap in SPX that I've been watching for a long time. It's been tested once, but it didn't, or maybe twice, really. And you can see it there around September.
Okay, September.
And go up.
Yeah.
Up until that gap. Okay, you'll see it right there.
You mean this guy right here?
No, to the right.
To the right. Okay.
Now go up.
Okay.
Up to the top there.
Uh-huh.
Keep going. Keep going right
here?
there. That right there. Yep.
Oh,
that
you're
little
right.
guy. I've been hanging out watching that guy for a long time, and it's been tested once. And it's been tested twice.
Oh God.
I just love where that gap is, because you trade into that and the breakout folks are going to be going crazy. And if the market is as nefarious as I think it is, they're going to bring it right there. And that's where the trap is going to be.
Okay.
And it just lines up so perfect with the way the GEX setup is right now. And into the tax season, like right at April 15th, that's when, like right after that, Vic X, and right after that, it's OPEX, and then boom, sell. Right? What do they say? Sell in May and go away, or something? What's the famous saying? Wall Street saying.
But the problem is, like, from an options perspective, man, like, I don't even know how to play that, right? Like, well, actually, I guess I do.
You would just buy the dips every day into the vol trigger.
Oh no, I'm saying the downside. Like,
I see.
Come up, hit, and then I'm like, because here's another scenario, not to be devil's advocate, but we tap there, and then it becomes this like slow grinding action where there aren't any more buyers, right? It's just like people kind of offloading, but at the same time you have the 0 DTE, which keeps on kind of like buffeting us up, and so then you slowly mosey your way down to 4K. All the premium of everybody that bought puts up here gets burned, and then you finally get the break. It seems like it's you see what I'm talking about?
Definitely, yeah, for sure. If you're thinking that vol is essentially going to stay suppressed, we could still go down into the lows. I agree with that 100%. I mean, I would say they're going to rug at 42, 42.30 or something. I don't think there's going to be a rug there. I mean, not until I see it. But it would probably start with a big gap down, though. Just
sure. There. It's kind of like, it would remind me of, you see this price action here where I have my cursor, right?
Exactly.
Where it's just like kind of slowly moving, and then one day you get this brutal gap up, and then all of a sudden you're like, oh my God, it's over. I got to get out of my puts, and then that's when it.
And you can see that. You can see there's a pattern. Okay, look at the pattern going all the way back up to 4,800. Okay, it's kind of like a head and shoulder, right? You would typically think of, but the shoulder always gets cut on the right side. The shoulder always gets rugged. The right shoulder does. And on a daily and weekly time frame, we're in that right shoulder right now. If you look at that structure from 4,800,
Yeah.
And if you go to the chart of FRC, I just want to point this out because I was putting this on Twitter, I think, and I thought this was interesting. Look what happens. Okay, it's a little different, but it's the same structure again. You're on the right side of this giant, rolling over. And I don't know, there's Wyckoff folks out there or whatever, but you wouldn't want to be buying in this part of the leg, right? And every time it happens, it pops up and then it rugs. It pops up and then it rugs. And that's where we're at with SPX and SPY, is we're in this little this part of the cycle where they're gonna pop it up to 4,200 and then it's over. And then it's over. I don't know if it's rugs or not, but I'm not playing for it either. I'm kind of sick of playing for it myself, just like the market is.
Well, I mean, I don't know if you saw the stuff I was posting in Bear Trap, but so I've been trying to short Nvidia for the longest time.
Oh, me too. What in
okay.
the world is going on with this stock, man? So I gave up. I actually gave up just trading it again because for the most part, I never trade Nvidia. I tried shorting it, and I'm just sick of it.
Dude, I'm actually up shorting it.
You are? Yeah, you've been selling the in the money calls, right?
Okay, so here's what I do, right? And this is stupid, like, I don't know, don't not that people even comment on our videos, but don't get mad at me for it or whatever. But what'll happen is there's this like pretty clear structure where it's like around here, it's like, having a hard time moving. So basically it'll just pop all the way up here, and I think the price level's like, let's see. Yeah, 275, that's the one I kept looking for. And so every time it pops over 275, I let it go, then I sell in the money calls. Probably I've actually been selling the 260s and the 250s, which this is okay, I'll explain this trade afterwards. And then when it comes down, as soon as I see in 0 GTE land that SPX is going to turn around for the day, I get out. Okay. And so every single time I do this, I like make, like $100 here, $100 there. But the reason I'm doing this, right, because theoretically, right, you would want to play Nvidia 0 DTE if this is the move that you're playing for, but this isn't the move that I'm playing for. What I want to have happen is the massive like deleveraging, because we know that Nvidia can run. And if instead of just making $100, all of a sudden I'm up 200, I'm up 300, I can leave the position on, and then I don't have to worry about it. And then I have really nice theta structure, and then I can position the rest of my portfolio in a really nice way around that position. So it's sort of like taking little bites in anticipation, and then being flexible, being okay with getting out if it doesn't work, and then I'll try again, try again if you don't succeed at first. That's the theory here.
Yeah, no. Well, what's funny is if you put this chart up against SPX, that gap on SPX we were talking about, you don't have to put it like, yeah, okay, well, that's fine.
Right, it's easy enough.
The gap we were talking, I've been watching, is similar to what happened here. There was a big gap. It didn't happen in September, but you see what happened here. So is Nvidia telling me that these gaps get filled and that it just keeps running? The SPX just keeps running? I don't know, because Nvidia is sort of like a leader, right? Like it's been going up.
Okay,
it's been
so
trending
I
up
do
while
have
the market's been sideways.
Like a macro rationale that I've heard that actually makes sense for what's happening, because it's not just Nvidia, right? Like obviously you look at Microsoft doing the same damn thing. You look at Apple. So this is so-called, right, like giants of tech, profitable tech, and you think to yourself, well, why the hell is this going on? We're entering into a terrible environment. But if you look at it, these guys are actually coinciding with things like the XLU. Like look at this rally in the XLU. Mm-hmm. Or you can take a look at what else is going to work there? I guess XL. No, not XLB, because that's a cyclical. Essentially
XLI.
XL. No, industrials are also cyclicals. It's anything that is just like communications, XLC. There you go. Look at that, right? Okay, so here's what's happening. Basically, we have no idea if this is going to get worse and we're going to go into a recession, or there's going to be emergency quantitative easing that's going to come in and boost everything. So picture yourself being an institution, you don't know which of those two things is going to happen. Okay, well, I'll just buy both. So the best thing to do is buy profitable tech with positive cash flow, i.e. Apple, Microsoft, Nvidia, whatever, And then simultaneously buy defensives, XLC, XLU. No others pop into my head right now, but you guys probably know what they all are. And what happens if you do that is essentially you're just purchasing positive cash flow businesses, and then you're getting the best of both worlds because if quantitative easing comes in, you guys know tech's going to rally like crazy, and these things are still going to be doing okay because they're not going to fall off a cliff. Whereas if we get, a terrible scenario, then everybody's going to pile into defensives because of the recessionary thing, and you're going to lose some on your tech. But at least you were positioned for both things at the same time. It's called the barbell approach, and this is not necessarily my. I listen to a lot of different takes, and this is my favorite one as to what's happening from a macro perspective right now. If I had to cite, I think it was on a dude on Macro Voices from Nomura.
No, that makes sense. I would like to confirm it with some other versions of this where people are positioning defensive and then also positioning for quantitative easing. I think this is sort of a version of the VIX going up and market going up at the same time.
Yeah, it is. 100%.
And people are just positioning for both, and then whatever happens, whatever. It's sort of just like a strangle or something on the market. They don't care. They're just ready for something to happen.
100%. And so we're seeing that actually pop into like broader institutional positioning as well, which is kind of interesting. Because I feel like early in the year, they were all like, oh, we can't touch this. And now it's kind of like, well, okay, we don't really want to touch it, but we kind of have to. So we're going to do this,
Interesting. Yeah, I need to look into that some more and see if there's some other, because just looking at XLI, XLC, and then tech, that's one way. Is it evident in other parts of the market? Like, what about gold and silver?
Yeah, exactly. Gold and silver are definitely part of this trade, right? Because if we get any sort of QE, I was thinking, do I want to use futures or do I want to use
Doesn't
futures?
matter.
Because we're cool. We'll use futures.
Yeah, right.
No. God damn it.
You just got to do GC. Oh, there you go. Okay. And you see gold breaking out.
Yeah, and god damn. Okay, in any case, this needs to be on a weekly because gold's insane. And let's get rid of this. But the thing with gold, right, is if you do get QE, then gold's going to go insane because the value of the dollar is going to go. And if you don't, then gold's going to hold up because what do people buy in a recessionary environment? Gold. So
Jim was right when he said he loved the risk return in gold leaps.
Yeah.
Remember he was saying that at when gold was sitting around 160.
Not to toot my own horn, but I've been in gold since 160.
Really?
Yeah.
Yeah. I should have bought it then. I bought it like 170 or something.
Oh, well, good on you though, because honestly, I was supposed to reload, and then when it came down to 170 over here, I was like, nah, like still too expensive for me.
You like those V shapes, man. I'm too addicted to them. Well, remember on the pod I said I was buying gold, right?
I remember.
I mean, but it was just
gold,
too early.
Man. I mean, it was just too early. Silver's insane right now. I mean, this is still, God, I've never seen a formation looking nicer than this, honestly.
I know, and yeah, talk about a base to buy from, right? So I did buy some silver at 22. I was chasing it a little bit, but on a larger time frame, are you really chasing it? That's not really.
No, it's looking good. I have trouble buying anything nowadays.
And then look at DXY. I just this one's obviously important, but I was looking at this over the weekend. And are you on weekly? Yeah, nice. Okay. Actually change that to monthly. I just want to get some perspective here on DXY. All this is a pullback on a monthly.
Oh yeah. I'm
support
honestly
at 100. I don't know, man. I'm thinking the dollar is gonna rip.
I think so too, and I think nobody really is expecting that right now, to be honest, because it's like obviously the crucial level here is the 100, which is right here. And so, okay, here's the case against gold, right? If the dollar rips, you know what gold's going to do, right? If they announce that they're not going to, because now the market, everybody's expecting. And if you look at them, well, no, we're not going to get into that here, but if you look at Fed funds futures or any sort of the futures markets having to do with like inflation swaps, all that stuff, expectation and Damp Spring on Twitter was pointing this out, that the expectation is really for QE right now. It's very significantly in that camp. And if it doesn't happen, what's going to happen is we're going to get another blow off top here, or just it's going to stop short and then it's going to come back down. So I'm actually not buying any more gold here. I'm actually short calls in gold because the risk reward, in my opinion, is no longer there.
Interesting. So you don't, you think this might form really kind of a quadruple top, but it's really a triple top here in gold.
Yeah, which is kind of weird.
So yeah, that's where the market's tough, man, because it's like dollar looks like it's about to go crazy. It's about to rip, but gold is also ripping and silver hasn't done anything yet. So are we going to get this market where everything's doing the opposite of what it should do for a little while? Like where the dollar's up, gold is up, industrials are up, tech is up.
I think
VIX
it's really possible, right? Like from a chart formation perspective or whatever, you wouldn't expect to see a perfect triple top. What you'd expect to see is, at this point, it jumps up, right? It hit like 200 or something over here, and then fall back down from there, and then rebase a little higher.
The ultimate market top is probably going to come when everything is up. That makes so much sense to me. VIX up, gold up, silver up, dollar up. Buy up.
Everyone's like, just buy anything, it'll be fine.
You know what's funny is the other day I saw something on CNBC and it was, or was it CNBC? Something popped up where it said every time frame on SPX was bullish. Was it an uptrend? All the way from like the 5-minute all the way out to like the monthly. Okay. And I instantly got bearish when I saw that. And that was the top. That was when we had the 2-day pullback.
Yeah.
It was that day. It was like that morning I saw that. I'm like, okay, yeah, we're selling off. It's like when everything is bullish. You just can't be bullish anymore. But, you know, the short term is essentially like a strategy that I like is if we're going to 4,200 or 420, you just come in here and you just you buy the low a day. And I think that's something you've been sort of doing.
Yeah, not even consciously, to be honest. I just look at the GEX structure and then I'm just like, oh, okay, I guess I'll do this now.
I guess we're going up again, whatever. And then, and that's just, man, it's just a factor of people getting too crowded in. And where? In on the bear side, in my opinion. You know, everybody wants that FRC trade or that, you know, SBNY trade.
This is just like a funny aside, and we should probably start wrapping up soon. But I remember I showed my girlfriend a chart of FRC, and she was like, "Oh, you should buy that, right? It can't go much lower."
Well, you know what's funny is I did buy some the other day. I bought some at like 13 or something like that.
I mean, is it already up? Where is it now? I don't even know.
It's at 14, so I'm up $1, but it's really just a trade of like they said they're going to save the bank. Okay. Mm-hmm. So if they're going to save the bank, then there's nowhere for it to go now as far as down. And they put a floor in it. It's sort of the way I think of it, you know. It's like, so it might as well be long. Who knows what happens now? I mean, the only place for it to go is up. There's quite a bit of short interest in it. People are expecting it to go to 0.
Okay. I don't know.
You don't
know about that. I've just I mean, okay, they're going to save the bank. This I just don't know enough about. Like I'm like, according to what terms, all that stuff. And then the other thing that I usually think about in these scenarios is I used to look at it and have exactly the same response. It's like, oh, it can't go much lower, right? Except that
well, that's not my response that it can't go much lower. It's that it's that they put a floor in it.
No, yes, I understand you're not looking at it that way. It's just from my I know that I have that really strong bias when I look at it, and so I just stay away from it because I'm like, I could not trade this effectively because it's too weird. It's too weird for my brain.
Sure. Well, okay, so it's the same thing that happens in SPY. Everybody's bearish because the bank failed. Okay, and it should go to zero. Right. I mean, it's just natural. It should be taken out, but they're not letting it go to zero. Okay, so everybody's expecting it to go to zero, or we're positioned for it to go to zero, and now it's not going to. Okay, the other two did. And those things are still trading. That's the crazy thing. Those other stocks are still trading.
What, they're like penny stocks or something now?
Yeah, they're still penny stocks. The other day, CivB, with Silicon Valley or whatever, it went up like 150%. The penny stock did. Yeah. You could have bought it at 40 cents and then went to like $1.30 the same day. And that was probably everybody just covering their shorts. But still, it's like it's still trading live right now, OTC. And it's like, okay, well, FRC was like $130 like a month ago.
Oh, that's so interesting. Well,
and now there's a floor at it sitting here around like 10 to 15 area. And I think it's just going to go up, man. I don't think it can go anywhere else unless it fails again. How is it going to fail again when they just backstopped everything? And that was the reason for it to fail. So I don't know.
That's a good question. How could it fail again if they just backstopped everything?
Yeah, JP Morgan infusing cash into it. It's like, well, okay, well then if JP Morgan fails, then everything fails. But if they're not letting the bank fail, then I'm just gonna buy a few shares. They did suspend the dividend and stuff, which makes sense. Okay, they ran out of money, so why would they be paying out dividends? But still, that's fine with me, man, because I think it's probably going to go up to like 25 or 30 bucks, and it's trading at 13 right now. So fine with me. If it goes to 30, then I'll just be out. You know what I'm saying?
What is the option chain like for this guy?
I think 10 is the floor on FRC.
But do they like how much? What's the cost? I mean, I'm just wondering if you could get better risk reward by playing options.
They're cheap. They are cheap. And I was thinking about that too. I just was like, well, let me just buy some shares here. We'll see what happens.
Yeah.
And so I may get into some calls on it or whatever, but yeah, man, it's funny you mentioned that because you showed that to your girlfriend and she's it's not going to go much lower. But here's the thing: you look at that chart, okay, and I think about it too. You always see that the market cycle chart where you got the emotions as you ride up, and then you got the return to normal, and then you got the crash where it's the capitulation, and then the despair levels, right? Mm-hmm. And where should you buy on that chart? Have you ever seen that chart? You know what I'm talking about, right?
Yeah. No, I have seen it, and I don't think you're wrong. Like I think the risk reward there is good. I just also have been in that situation where I see something and like I'm judging it based on the chart, like where I'm like looking at it, I'm saying, oh, it was trading here. Like, okay, take a chart of.
I'm not thinking it's not going $100 anytime soon. That's not what I'm thinking. It may not even ever go to 60.
Yes. Yeah.
It would be hard pressed for it to go back to 60, but because it's in trouble for, who knows how long it's been in trouble. How are they going to dig themselves out of it?
The real play here, instead of buying shares, is buying their corporate debt.
Yeah, how would you do that? I don't even know how to do that.
I'll look into it afterwards, but usually you can, right, there's like high yield bonds that they're releasing or have released, right? And those are going to have insane yields right now because the probability of default is so high. So you can essentially just put them in your bond portfolio, and hopefully they're like a coupon bond or something. You'll just collect a like 14%, 20% interest rate for like years or something.
I see what you're saying. Well, yeah, that is one way to do it. I guess maybe you could do that too on top of it. I'm really just doing it for the squeeze.
I know, man. You're doing it because you're a degenerate.
No, not only that, but like I said, you always want to buy in that despair level, right? You don't want to buy in the euphoria. So if you're presented with despair level on a stock that's been saved, essentially been bailed out, why not? It doesn't make sense.
I don't even know why I'm taking the other side of this because I bought XLF, remember? Like
it's true. Yeah. Are you still in it or did you get out?
No, I got out at 32.
Yeah, well, there you go, man. Yeah, you're doing the same thing I'm doing right now. You were doing the same thing, and I've already traded FRC up and down like 3 times. But I think earnings are coming up. I think they're gonna squeeze them shorts out again. Whatever, dude. It's that's why you trade shares on it, so you can just set a stop loss and just hope it doesn't hit.
Oh yeah, stop loss.
Oh yeah, what about that? Oh yeah, those are neat.